Thank you for joining us now. Here are some of the reports we're filing at this hour. I am Frank Komalape. The World Bank Group has said that public debt in Nigeria and other low and middle income countries is now at a 50-year high, which is equivalent to more than 200% of government revenues. In a new report, the Washington-based bank said with the pandemic-induced economic downturn, the impacts of the war in Ukraine and the rise in interest rates, many countries were facing severe challenges in servicing their debt. According to the World Bank's recent International Debt Statistics 2022 report, as a result of COVID-19, the external debt burden of the world's lower-income countries rose by 12% to a record $860 billion in 2020, the fastest accumulation since World War II. According to the report, despite the unprecedented debt burden many governments were facing, the true extent of their public debt liabilities was often hard to quantify. Many low and middle income countries will not disclose timely debt data or at times published incomplete data that understated the true level of liabilities, the report further said. The report further said that debt transparency was critical for attaining sustainable financing and achieving macro financial stability. It will facilitate new and high-quality investment, reduce corruption, and instill accountability, it noted. And away from there now, federal government's expenditure on pensions and gratuity fell slightly by 3.48 billion naira in 2021, according to figures obtained from the Central Bank of Nigeria. The CBN revealed in its data on federal government recurrent expenditure that the amount spent fell from 359.6 billion naira in 2020 to 356.12 billion naira in 2021 financial year. Despite yearly allocations, the federal retirees have continued to complain of payment challenges. Pension Transitional Arrangement Directorate in charge of the defined benefit scheme under the federal government had earlier said it inherited pension liabilities totaling 129.48 billion naira. The directorate, however, said it had cleared almost all the pension liabilities and was ensuring that all outstanding arrears were taken care of. Recently, some retirees under the federal government or Federal Civil Service Pensions Lagos State Branch protested non-payment of pensions among other challenges. In the meantime, the federal government has signed a tripartite agreement with the World Bank and the French Development Agency to commit an envelope to the tune of $575 million for the construction of rural roads in 13 states in Nigeria. The project will see the construction of rural roads covering a total distance of 53,730 kilometers between March 2021 to 2026. The National Coordinator, Rural Access and Agricultural Marketing Project, Aminu Mohammed, after a 2-week third implementation support review mission meeting in Abuja Friday, said 12 of the 13 states had received the takeoff disbursement. Mohammed disclosed that the International Labour Organization has expressed its readiness to offer both financial and technical assistance to the Rural Roads project, adding that the World Bank will fast-track no objection to the ILO intervention. And now the Nigerian Export Promotion Council, NEPC, has said that the adoption of Export Trade House would further drive the country's non-oil export, increase market share, and take maximum benefit of the African Continental Free Trade Area Agreement, AfCFTA. As a result, the Executive Director, Chief Executive of the Commission, Dr. Exra Yakusak, said the Council intended to establish the Export Trade House in different centers around the world. Yakusak, during the advocacy program on Export Trade House, said these trade houses are to cover export activities in the various regions of the world being targeted by Nigeria. He said to this effect, the Export Trade House is expected to improve value addition on our export of products through cleaning, processing, distribution, and marketing. This in turn will lead to economies of scale and international foothold in finding new customers and managing currency risk. End of quote. And now the Securities and Exchange Commission, SEC, the National Insurance Commission, NICOM, as well as other regulatory bodies have reiterated their commitment to ensuring that every segment of the society is covered in the ongoing financial inclusion initiative of the federal government. Director General SEC Lamido Yuguda in a statement assured that with the help of the fast-growing fintech penetration in the economy and financial system, more Nigerians will be captured and be more protected to effectively navigate the nation's fiscal and financial system through the enabling channels, including the capital market, insurance, and savings. Yuguda added that the Commission has created a new standard and rules for the registration and operations of fintech firms in the market to ensure compliance with global standards and adequate protection of investment. He reassured stakeholders that the licensed fintech companies will further speed the financial inclusion policy of the federal government, as well as ensure adequate protection for their financial investment. An expert has advised the federal government to provide soft loans for tech startups to improve innovation and develop the sector. Director, Midas Infotech Group, Chukwunonzo Ezekwe, stated this on the backdrop of reports that the federal government of Nigeria is working on modalities to allow tech startups in the country to sell their solutions to the government with ease. Ezekwe added that this latest approach by the federal government may not produce the expected results, as there are cliques in the tech ecosystem. He spoke earlier in the day on iBrandTV's flagship morning show, Business Breakfast.
In the tech ecosystem, because we've heard about the Nigerian startup laws and the Nigerian startup bill, which has never flew, as it's been in the National House of Assembly for some time now. So those laws, like what the government has said right now, I think it's a good one, but let's see how far it goes, because we're looking at jumping into a tech ecosystem that has something we call cabals and different cliques. So let's see if the average startup owner can be able to access one or two of those benefits. The thing is, like I said, there are a whole lot of startups out there that first thing first, they are really having access to fundings. So if the federal government can through CBN organize like soft loans for these guys or grants, I think it would be better than making statements of such, because as it stands now, there's been a whole lot of let me just say, too much talks as regards startups in Nigeria. But when it comes to activity and activeness, you get to see little or nothing. So even the Nigerian tech space, the Nigerian tech space is being powered by mostly VCs from America and Europe. So for the government jumping in on this startup, I think it's a good and a very right way to go. But how far is it go? How far will it go? That's the problem. That's the question to ask. Because there have been statements, there have been laws, there have been bills.
Away from there now, the Nigerian Communications Commission, NCC, has said it will be deploying revenue assurance solutions to increase the amount of revenue going to the coffers of the federal government from the telecommunications sector. According to the Executive Vice Chairman of the Commission, Umaru Dambata, it became imperative to take this step as resources at the disposal of the government continue to dwindle by the day. To that end, the Commission at the weekend signed a public-private partnership PPP agreement with the consultant 3R Company Nigeria Limited for the execution of the RAS solution. The EVC of the NCC says the deployment of RAS will enhance monitoring and regulatory activities concerning annual operating levy, administrations in the communications industry, and cover highs levels of integrity and infidelity on the AOL figures obtainable in the industry.